Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. It's a choppy trade on Dalal Street, even as the Nifty and the Sensex recover losses after a gap-down opening. This is uncertainty around global growth and monetary policy action lingers. Midcaps outperform. Auto, IT, Pharma show spunk, while energy falters.
Supriya Life Sciences slumps after its CEO steps down citing personal reasons. The stock is down about 24% from its listing price.
Godrej Properties gains on a land deal in Bangalore. The 7-acre project has a potential booking value of over 700 crore rupees.
News flow gives select mid-caps a fillip. Gujarat Alkalis is boosted by a new capacity expansion. Mothers and Sumi wiring perks up on hopes of a bonus issue.
Positive brokerage commentary boosts Muthoot Finance after Kotak Securities upgrades the stock to buy, raises the target price. This comes as the rupee's sharp fall is favorable for domestic gold prices.
All right, those are the top headlines that we are tracking. By the way, the mid-cap index is the one that is shining in trade today. That one is up 116 points. Some of the earlier losses, they have been cut. We have been discussing how markets have been volatile. And now Nifty is sitting with cuts of just 10 points versus around 40 points just an hour back. So there is some buying from the lows. However, there is still some volatility which is on the cards. We have the Bank Nifty, which is the one underperforming today with cuts of 0.3%. And these major or bigger names like Reliance Industries, you have some other banks which are not doing so well, and those are the ones putting pressure on Nifty. But Reema, today Pharma and IT seeing some buying, and they are batting for the bulls.
Absolutely. So talking about the Pharma winners for the large cap, you've got Sun Pharma, which is up 2.5%. Dr. Reddy's is higher by close to about 2%. And autos ahead of the festive season. Over the weekend, we will get the auto sales numbers for the month of September. And we are in the midst of Navratri, so the festive season is truly begun. And there is a lot of hope and excitement ahead of that. And buying is visible in names like an Eicher Motors as well as M&M. These are amongst the big movers. Asian Paints too is making a big comeback. This week, the stock has rallied close to about 4.5% as crude prices continue to remain at very low levels. It's $85 per barrel on Brent crude. But let's talk about Newgen Software. That's the company on our radar. The company recently launched the world's first low-code trade finance platform. It's expected to boost end-to-end automation and empower banks. To discuss this and to understand the impact on Newgen Software, we're joined by Virender Jeet, the CEO of Newgen Software. Thank you very much for joining in. In the press release, you've said we're really excited about this launch and are confident that this will play a pivotal role in accelerating Newgen Software's growth. Can you talk about the opportunity as you see it from this launch?
Good afternoon, and thank you for having me there. I think what we've done is, on this trade finance, we have launched this product, which is the first low-code trade finance automation product. The market in trade finance is for a growth. It's on the upside, and what we are expecting this industry to grow roughly around $2.9 billion of software industry in next, by 2027. What we have already got some huge interest from some of our marquee customers where we have started implementing this product. And globally, we are looking at another, around 10 to 12 opportunities which we are pursuing across markets. Markets like APAC, India, and Europe have a much larger, market share for this trade finance. And these are the markets we are trying to go and build inroads into. And we are quite excited. The low-code part of it is very important because what's happening in all digital automation platforms that the last-mile needs of the customer are becoming very important. Systems have to be built for change. And that's what we have been pursuing all our products. And we're very excited about this product.
Okay, so you've got interest from existing customers as well. There has been implementation for some of them, more opportunities as well globally. So in terms of your R&D estimates, does it change because of the new product or new technology that you have launched?
We are, always looking at opportunities to push our R&D up, and right now we are roughly around at 12% of our revenue on R&D. Since this trade investments we have been doing for last 2-3 years, it's already factored in our R&D cost. So this does not push the R&D cost. But in general, as we start penetrating more markets and keep on strengthening our product portfolio, this keeps on growing. But it's not concern us because we are into a business which is a high gross margin. We are into a license-based revenue. So it's natural that we'll keep on investing in our R&D and keep on growing our R&D investment.
Virender, how many of your customers are already onboarded for this platform? 2, 3, 4, any number?
So, see, right now we have 2 customers who are already onboarded on this platform, but I think the conversation is going on with another 10 to 12 over next, these cycles. So this is typically a very, very critical system for any financial institution, and the decision-making cycles are pretty long, but the relationships are also very deep.
Okay, and do you think you will be able to onboard the 10, 12 with whom you're in conversations with this year? Can we add these deals in FY23?
No, I don't think so. It's going to take a bit more of time. We may close some more deals this year, and next year we may close some more. So this is not something you're going to close hundreds of deals. I think what we are looking at marquee customers, maybe every year if you can add 5, 6, that will make a substantial impact on the company's progress.
Okay. Now let's generally talk about demand and business. I know you're on silent period, but just some qualitative idea if you can give us. How has Q2 fared so far? Q1, you did see some missing of orders. They were delayed slightly. How is the situation right now?
Yeah, so as you really know, globally, I think the uncertainty around kind of cost, the interest rates, as well as many problems which are happening in Europe, there is a broader uncertainty in the market, and some of the customers are getting concerned around that, which is holding up decision making. But on the overall demand side, I think we still see strong demand, and we see this demand across broad base, especially markets like India, which are almost seeming like almost least impacted by this. Similarly, APAC is turning out to be a strong market, and Middle East, once the oil prices hold, I think the market continues to behave well. But US and Europe are a bit of concern because out there is a deeper impact of what's happening on the inflation or the fear of recession side. So it's kind of a mixed bag right now. Having said that, I think we have no reason to believe that this is not going to be a growth year, or we'll continue to meet our growth momentums, and we'll continue doing well this year as well.
You said US and Europe is a bit of a concern. What exactly did you mean? Is it, are you seeing decision making being delayed or the deals getting pushed forward? What is happening on the ground with your US and Europe clients?
So Europe, we have very, very little penetration. Correct. So it's not a big concern from the revenue, but we have seen that in the US market, there's a bit of turmoil in the whole industry. I think the clients are slightly uncertain about decision making and going forward with new initiatives. US lately, over last 2 quarters, we have seen the same concern really, especially in the larger clients, where they are really holding back or trying to think about whether they can go ahead with that. Having said that, the market is quite wide and our penetration is very, very small. We still think in that market we should be able to, whether it's around growth or whether around opportunities of optimization, we should be able to make a difference to the clients. So what's hurting the business is uncertainty about what's going to happen next, which is pushing people to slightly get into safety corners of not deciding. I think either way, if we get into a recession cycle where we need to optimize, look at costs, and I think we will have an opportunity in that cycle. And if it's a growth cycle, we have a very strong portfolio of products where we enable growth. But what is happening this quarter, next quarter, I think this uncertainty is really bringing in some concern on the business side. Having said that, we have multiple engines, India, Middle East, which is doing well, and the US, where our penetration is small and we are trying to build inroads. This should, still with all these scenarios, we should be able to still have a growth area.
So 20% revenue growth for FY23 is in the bag?
I wouldn't like to comment on that. I think we're not in that, but I think we would like to maintain our growth. And I think last year we returned back from a kind of a low revenue or low growth year prior to that, and I think we should be able to meet that and exceed that.
Virender, you're not giving us a number for FY23 revenue growth guidance because you're in the silent period, because 20% revenue growth is something you articulated in Q1.
I would.
Or is it because of uncertainty?
We have a historical trend of doing that.
Yes.
And we see no reason why we should not be able to continue doing that.
Okay. All right. Sri, thanks a lot for joining us and taking us through what this new product launch means for you and the outlook in terms of demand as well. That's the word coming in from Newgen Software. Mixed bag as far as demand across categories and geographies is concerned. But for now, we'll slip into a short break. Up next, we'll be joined by Siddhartha CH of Vishnu Chemicals to discuss the company's business outlook and much more. Stay tuned. Welcome back. Well, Vishnu Chemicals is in focus. The stock is doing well in a weak market, and we are going to talk to them about what's happening as far as energy prices that continue to soar in Europe, a key market for the company. Also note that natural gas prices have zoomed to nearly 26,000 lira in Turkey from just over 1,600 lira in April last year. To discuss this, what's their outlook and exposure to Turkey, the business outlook as well, Siddhartha CH, the Joint Managing Director at the company, joins us now. Siddhartha, good afternoon. Thanks a lot for joining us. Well, I just wanted to understand the Turkey connection. Gas prices have been soaring there. You do have clients from that particular region, but there are some competitors as well. What does it mean for your company overall?
It's a very positive thing what's happening, especially when it comes to sales. This energy prices, especially we are seeing very strong customer inquiries coming out of North America and Europe. That's definitely going to help us in the coming quarters. That's how we are seeing.
So you have clients in Turkey or competitors in Turkey? What's your exposure to Turkey?
So our exposure to Turkey in terms of sales per se is about 3%, but we have a strong competitor who's catering to 15% of global demand.
Okay. Okay, so that way you benefit from the higher gas prices. So your competitor has shut capacities or reduced capacities there?
Well, what I can say is we are seeing more inquiries coming out of North America and Europe. So that's giving us a signal that there have been some challenges, especially on supply and pricing from their end. So that's the kind of sense we are getting given the inquiries what we are seeing at the moment, and the forward booking what is happening at our end.
Can you quantify the increased inquiries that you're seeing from US as well as European customers? And do you have the capacity to service this extra demand?
You see, we are currently operating at over 80%, and we do have additional 12% capacity, which we could quickly bring it on.
Okay.
So that will not just over the last 3 quarters, the 2 other product mix, what we have developed, they have worked quite well, and we are seeing repeated inquiries from the customer.
Okay. And can you quantify the increase in the number of inquiries that you've got off late from? Yeah.
I think it's from the same clientele. They're expecting around 30% more volumes in the coming 2 quarters.
Okay, interesting. So 30% more volume. So exports has been very strong for you. In Q1, exports were up 65% on a YY basis. Because of whatever is happening in Europe and Turkey, so to say, do you think exports will grow at a faster rate? What is the kind of growth do you expect in FY23 itself?
It's as per our previous guidance, what we are seeing the same levels. And what's adding to it is the current rupee depreciation is also going to improve our margins in the coming quarters, and easing of supply chain, is also going to benefit in terms of deliveries from our side.
Okay, you said that you have an additional 12% capacity which you can get on stream. Is that going to happen? If yes, how soon, and what will be the incremental revenue benefit?
Increment, it's going to be more on the volume side. The value, I would not be able. It's only on the volume side. We are going to see an increase over 15% from our previous guidance. But values, I won't be able to give you a number per se.
So what is your new volume guidance for FY23 now?
It will be over 12% from the previous volumes what we have anticipated.
Okay, so 12% higher. I just wanted to understand in general, are barium and chromium energy intensive chemicals? What is the general outlook on raw material pricing or output pricing, so to say, here?
They are not energy intensive, and let me tell you that we are not using any natural gas in our process. So definitely there has not been any impact on the cost, especially on the variable side. And what was your other question?
Yeah, that is all. So how has the pricing been on these cells, on the demand side? Have you been able to increase prices since demand is going up? Is that happening in the market?
We are currently under discussion with the customers. Our objective is to not increase price on a quarter-on-quarter basis in order to make it more sustainable in the long run in terms of supply and the demand. But what we are seeing is definitely there's going to be a margin improvement in the coming quarters on account of rupee depreciation as well as lower logistics costs.
So what will be the extent of margin improvement? Or what is the margin that you anticipate for the current quarter and the next?
That's going to depend on the product mix, what we are going to work on. Like we are working on 6 different products, and
Correct.
they start off from a key starting raw material. So that's currently under discussions given the order book.
Okay.
But I'm definitely anticipating a 200-300 basis point further improvement in the operating margins in the coming.
Okay. So is that over and above or slightly different from the backward integration benefit that you will get? So you expect this to be an added on benefit because of lower logistic costs and rupee depreciation?
Yeah, that's pretty much how it is. So like I said, our targeted EBITDA for the next year would be about 20%. So we are pretty much in line on our targets. That's what I can say.
Okay. I also wanted to check on this backward integration. It was around 50% utilization level in Q1. You had planned to scale it up. On a quarter-on-quarter basis, has it remained stable, or you have been able to increase utilization levels here?
Yeah, over this quarter, we have definitely seen an improvement in the utilization from 50 to 65%. And the thing is, we are very positive that we are going to operate it at 90% from the Q4 onwards.
Siddharth, out of time, but thank you very much for joining in and explaining the situation on the ground right now. That's Vishnu Chemicals for you. They're anticipating a volume growth. The volume growth this year is going to be 12% higher than what they had earlier anticipated. A lot of their global customers are asking for higher volumes from Vishnu Chemicals as their competitors have been hit on account of the high the gas prices, because of which some of them may have even shut capacities. And the company is confident about a 20% EBITDA margin for FY24. Get into a break, but as we do that, here is an important update for all our investors. You can track the US market action real time on Money Control. So log on to the Money Control website, app, stay informed about all that matters in the global markets. Welcome back. This is our special Midcap Spotlight segment. Abhishek is standing by, and he's going to put the spotlight on Canfin Homes on the back of their conference call. Abhishek.
Well, Rima, as you mentioned, the Canfin Homes had a con call today earlier in the morning, and wherein they clarified over the fact that, there is no link between identification of frauds and resignation of CEO. So they have initiated the hiring process, that is to replace Girish Koski at the time when he retires or when he leaves the company. So total fraud amount is 6 crore, the gross number, and the net number is less than 3 crores. Remember that in an earlier interview to us, they had said that the fraud amount was 3.94 crores. So from there, it has increased to 6 crores. Now, frauds took place due to collusion and not due to any lapses in the process of the systems that they have in place. The number of clusters have increased from 14 versus 3 earlier. That is, the penetration has increased. And they also spoke about the industry, that there is growth that they see over the next 5 to 6 years. So they would continue to focus on the southern state markets and then focus on the northern state. They have reiterated their spreads and net interest margin guidance of 2.4 to 3%. I remember in an earlier interview, they had guided for a net interest margin of anywhere around 3.4 to 3.5. So there is a cut in the net interest margin guidance, and credit cost guidance for the upcoming quarters. They have said that it will remain between 11 to 14 basis point per quarter. So increase in credit cost would be only due to bucket movement of the loans, that is loans which are getting overdue over 30 days, 60 days or 90 days, so on and so forth. Back to you.
Thank you very much, Abhishek, for that. Canfin Homes bringing down their net interest margin guidance in the conference call. Well, that's all the time we have for you on Midcap Radar. Thank you for watching. Your stocks when we return.